I would like to welcome to the stage Andrew Work from Next Exchange, Marco Rosti, Phoenician Group, Michael Lintz, Golden Gate, and James Savage from Demeter Ventures. Welcome, gentlemen.
All right, good afternoon. Thank you very much, Michael. Glad to be down here at 121 Tech Investment. This house is going to get packed, I know, because we're talking fintech and we're talking blockchain. Michael, are we taking questions from the audience today? Yes. We will take questions from the audience. Okay, so mentally prepare yourselves, because we have a panel up here, the likes of which you will likely not see again. If you wanted to come and see these guys individually and ask them questions, I don't know what their hourly rate is. It would be thousands and thousands on an hourly rate. Just to get their wisdom, but you're going to get it here today at 121 Tech Investment. We started off with very short introductions, and then I'm going to let these gentlemen introduce themselves very quickly. I am Andrew Work, Head of Content, Asia Pacific at Next Exchange. We are ecosystem as a service. We do innovation, fintech, blockchain, insurtech, smart cities, you name it. Check out the website, check out the app. It's all good. Fintech O2O and Block O2 events. Yeah, that's us too. Okay, enough. Marco, tell us about what you're doing.
Good afternoon. Good afternoon, everybody. My name is Marco Rosti. I'm Managing Director of Phoenician Group. We are an investment firm. We manage money, invest, and advise across various sectors, including healthcare, fintech, and mining. We have an office in Hong Kong and in Shanghai, and we're looking for interesting ideas and interesting investment opportunities.
All right, great. Michael, fire away.
Hey, my name is Michael Lintz, based in Singapore. I'm a partner at Golden Gate Ventures. Again, Singapore-based venture capital firm. We've been around for about 6 years. We're up at our third fund. We usually invest around Series A, which means a check size between 1 to 5 million. We've made quite some investments in the payment space, so definitely we'll talk about the payments a bit more later on.
Yeah.
And our main focus is to invest across Southeast Asia, Hong Kong, Taiwan, Korea, and Japan.
Okay, very good. He looks very gentle in his pink shirt, but he is, in fact, savage.
Hi, James Savage from Demeter Ventures. Demeter Ventures is a global fintech fund. I have an operation here and an operation in New York. We are running a $100 million fintech fund, looking for sort of Series A as initial stage of investment, but then following on from there. Pretty broad definition of what fintech is, because obviously as you move across countries, your level of interest change. I've been around Hong Kong since the mid-90s, been a venture capital investor here since about 2000. I spent most of my career here actually running HSBC's venture capital business in the region. So been around fintech for a very long time, before it was called fintech, put it that way.
Okay, before we get down to business, I will ask you guys, names of your groups. Golden Gate, I'm guessing a nod to San Francisco?
Yeah, it is. Two of the founding partners are San Francisco born and bred, so that's why.
Okay, sounds good. Phoenician?
It's seeded by European and Middle Eastern funds.
Okay, very good.
Demeter is the Greek god of harvest, but if you break it down apparently and look it up in the books, it's actually harvest, renewal, harvest and renewal, harvest, growth and renewal, which we thought was pretty good for a venture capital fund, so that's why we chose her. And our logo is a torch, which is her symbol.
All right, showing the light. Okay, very good. Okay, we want to get into fintech. One of the things we want to talk about to start of fintech trends, what's hot right now, what are investors interested in? Because the things that are making the headlines might not be what the investors are looking at. Maybe their actual sentiment is maybe, you know, moving ahead of what the headlines are saying is the hot thing. So guys, tell us, what are you interested in right now? And is there a gap between what, you know, everybody's going crazy about and what you think is really interesting?
Yeah, Andrew, thank you. Let me start first. From our end, what we think is really undervalued today in fintech is insurance. I'm seeing a lot of interesting ideas around insurance and how fintech can really enable insurance companies to become more competitive. One of the things that I think we don't appreciate enough is the fact that any financial institution has a huge amount of data to make decisions from like financial investments, and they are actually produced on a daily basis or on even hourly basis. Whereas insurance is still remained a business which essentially makes their pricing on a yearly basis. And the risk is captured on a yearly basis. It's very static. What we're seeing is lots of insurance companies actually becoming very interested in for instance, in medtech. That's why our investment cuts across various sectors, healthcare, fintech. They are becoming more related. For instance, the ability to check your lifestyle, to check how you are employing your time is a huge financial insight for insurance companies, and only now they're starting to believe in the value of monitoring that system of data in much more closely.
Yeah, because that's a big shift in how the data was collected before. It was surveys. It was like, you know, people saying, "Oh, this is how I feel," really. But now you can get real data. But are insurtech companies really in a position to analyze that data effectively? Is that for real?
Not at all. Not at all. In fact, we see that there are startups that are being formed and offer big data analytical service for insurance. Insurance inside are still very, I think, old and bureaucratic, but the top leader realized that that's really the value. And one thing is, many people are asking, okay, what happens if you have a very healthy lifestyle, you can get a discount on your premium. What happens if you don't have a very healthy lifestyle? Will you get an increase in your premium? And the answer today is no, your premium will remain constant. But in the future, it's probably going to be that the premium actually will reflect the evolving lifestyle of a certain person, evolving exposure to risk. And today we're very much, I think, okay at ease with the idea that you pay LIBOR on your mortgage, so your payment on a monthly basis changes, and it's not a really major impact. So having a degree of volatility on the insurance premium could be beneficial for everyone. It could actually affect how insurance gets priced, and basically in a much more accurate fashion.
Okay, super quick one, because I want to hear from Michael and I want to hear from James. But have you guys pulled the trigger on any insurtech investments yet?
Not yet.
Not yet.
We're looking at 3 or 4. Yeah.
Okay, gotcha. Michael, what's hot? What do you like?
A lot.
Which may be two different things.
Yeah, exactly.
You could be a contrarian.
We could have like an hour conversation about my preferences, but let's let's skip that for now. Okay. So I definitely agree with my colleague here. So we see more and more insurtech companies popping up. If I would compare the last 12 months over the 12 months before, I would say at least it has doubled. And whether it's the very simple checkout insurance, I buy something online, I want to insure it right away, the travel checkout insurance, or the more complex, middleware layers, end-to-end insurance propositions, we're just seeing more and more. So it's definitely an interesting proposition. We've made 11 investments in the payment space. So
in the payment space. So you okay? Clearly, your preference is revealed.
Yeah, clearly, we feel that in terms of payments, we are just scratching the surface. And I know that everyone is looking at the big guys like WeChat and Ant. If you look at their development and map it towards, for instance, Southeast Asia, I think we're still very, very, very early. And I'll give one example. In Singapore, I still need at least 7 apps to do a bunch of payments, which is stupid. Doesn't make any sense.
Yeah. Yeah, I mean, that sounds crazy. And I mean, when I was down at Money 2020, Alex Kong is like a big hero in the fintech space in Hong Kong. But their original plan was to spread out across Asia, take over the space, and then forget it. Like Google Pay and Alipay and all these guys are coming down, the heavyweights. But now he's teamed up with other kind of the best in each country, right? And they're trying to make an alliance. I mean, do little guys like that have any chance? Do they have to get together with somebody, or has that ship already left? And if you're not a mega player, you're done. Do you still believe in up and coming?
I still believe that if you look at sort of at a per country basis, there are niche players that will be large in a country. They won't be large in the region, but they will be large in a single country. And that's still a very interesting proposition.
Okay, so Alipay is not in Cambodia yet. I got the best in Cambodia. Would you invest in me, hoping that Google or Alipay would come and have a bidding war for me?
So I think there's a few plays. So as an example, on the B2B side, we're seeing a lot of SMEs struggling with payments. So you can build an amazing business just servicing SMEs. If you look at the B2C side, where people want to use simple wallets as a way of transacting, it's an amazing business. We still see the wealth space as an amazing business. So there's a lot of stuff that you can do per country in Southeast Asia.
Okay, sounds good. James, insurtech, payments, what's your thing?
I want to go at it 2 different ways, but I think first of all, I'll carry on along the trend and say the one I think we've not talked a great deal about is sort of regtech, because if you look at what's the real challenge for the current financial institutions, regulation is killing them, right? And one of the reasons that they do a lot of horrible stuff to us as consumers is their regulators tell them they have to, and they don't have enough people to do what their regulator tells them. So there are a lot of stuff going on in the back addressing sort of real pain points. And some of that is software sold into the institutions. Some of it says, you institutions can't cope, we'll just take the whole of that out and do a different business with it. And those are turning into quite substantial businesses quite quickly because the volumes at the back of these institutions is so large. So that's an area I'm looking at, sort of reg tech. I want to go back also a little bit and sort of think about it market by market. I think I've been saying this for 12 or 18 months, and I've been a big fan for a while, but I think that you do need to very much look at it geography by geography, right? If we're talking about sort of massive financial institutions, big back-end systems, then you're talking about more developed countries in Asia, the Hong Kongs, the Singapores, whereas Hong Kong and Singapore don't have more than probably 10 million consumers to rub together between them, which is a small-sized town in China, right? So not much point in a consumer business here locked in either one of those particular markets, but they are the people with the big back-end infrastructure. Whereas if you go sort of in India or Indonesia, then you've got a very much bigger market. I think for me, one of the big things that's going on, and I've been involved with it for quite a while, is what's happening in India. I think we can have a different argument about what the valuations are there. But as far as the level of change and what's going to happen, I can see sort of India coming along very rapidly behind China in the way that they've managed to completely digitalize their consumer financial space. It's coming, and it will happen very quickly.
Do you think part of that growth is because of things that happen in the financial sector, or is a lot of India's success driven off the fact that people actually have identity now? This new Aardvar, whatever, the hard I'm saying.
Aadhaar.
Aadhaar, thank you. Good.
Someone speaks better Hindi than me in the room, excuse me, but Aadhaar. Yeah, so Aadhaar was a key part of it and rolling out identity for everybody. I think if you're actually working in the trenches in India, you realize that there's a big number that's being banded around by the government. Not all of that is real. Some of it is not real. People have been given a card, but they don't know they've got it, and the bank don't know who it is who's got the card either. So it's all a bit sort of tenuous. But most of it's there, and that's great. ID will be a big driver of it. I think the other thing is technology. We're getting... the vast majority of the Indian population do live in the rural wilds. I've actually invested in a company there sort of 10 years ago doing this, and we managed to build a pretty substantial payment network in the rural villages with no power and no telecoms. How do you build a bank with no power and no telecoms? That's a pretty interesting problem. It's a very sort of specific problem to those kind of markets. But it can be done, and you can make money at it, is the answer. But the government tells you everyone's got an ID card, every village has got power, and every village has access to mobile. Not everybody has an ID card. Most villages may have power some part of the day. Yes, there may be mobile coverage on a good day with no rain, but most of the time you've got not even a simple GSM signal in these villages. And in order to get any kind of mobile stuff going, you need at least a sort of GPRS or 2 or 3G kind of signal. They don't have it. So how do you actually do that? And that's an interesting issue that you need to deal with as you go down into those more remote parts of India. But it can be done, and I'm sure it will happen. It's going to be a different kind of technological solution to what the guys are thinking about in Silicon Valley, but it will be a solution.
Okay, and I mean, this raises, when you talk about people in India, like you're saying that like a lot of people are not there yet, the potential's not been filled, but a lot of people have been brought across the line. Like financial inclusion is a thing, but how much farther can fintech take us? I mean, there's still big markets out there, but
I'll give you an example. In this business we were running, we were dealing with big financial institutions who were trying to sell their products to these people in the villages. So the banks were trying to sell credit cards and car loans and car insurance to a man who had a brick farmhouse and a cow. And this just doesn't work, right? So you go to them and say, look, can we sell an insurance policy that insures your cow, right? And you could borrow some money to buy a new cow. And they said, yeah, that's great, we'll have that. You go back to the big guys in the cities and they say, we don't have a product that does that.
Right.
And we sort of, yeah, but these people are there, we've got a means to distribute it. Do you want to do it? No. Right, okay. And that was kind of where we met an impasse.
Right.
But the startups are now saying, oh no, okay, it takes me 1,000 cows to equate to one car, But there are 1 billion people out there, so that's not a bad number if I can service them at the right price point.
Yeah, Michael, what do you think? You know, a lot of payments has been, you know, a lot of the payment space has been getting to people that previously didn't have access to finance. They got a mobile phone, now they can get banked. I mean, where are you guys looking at that? And
so I think there's been a lot of talk about financial inclusion without sort of providing the solutions, as you mentioned, because the big FIs had no idea what was happening in those rural areas. And I think that's where startups have been a perfect fit to be very nimble and very flexible and kind of work with these people. And I'll give one example in Indonesia where one of the companies we've invested in decided not to focus on, you know, sort of the millennials in Jakarta and offer them a payment solutions, but focus on the vast majority in rural Indonesia and offer them a payment solution. Much more difficult to build. Much more difficult demographic to reach, because this is actually going door by door by door by door.
Wow.
And selling the product.
Yeah.
But once you get to that mass, it goes.
But the thing is, the people who are going knocking on the doors because they're villages, they're cheap, right? They're cheaper than a mobile phone, so you can do it.
Yeah, I mean, but would you invest in that? Are they going to make money in the end?
We did, and we sold the company to Gojek, so eventually.
Dude, way to go.
Yeah. There you
All
go.
right. That's what we like. Excellent. And how about you, Marco? Have you guys been looking at this whole question?
Yeah,
or
I mean,
investing in this space?
listening to conversation here, I think what we actually looked at mobile payment solutions in Cambodia and China.
Yep.
And I think what really drives adoption, it's to me, is very much boils down to culture. In China, for some reason, farmers are very much okay to get rid of cash, for instance. Maybe it's not the same in India or in Cambodia, it's completely different. But what we find in Cambodia microfinancing is very difficult to actually replace the incumbent players. They are there for a long time. They have a very established loan model. Whereas China, everything can be disrupted very quickly.
Right.
And the other thing which I noticed when you look at mobile payment startups in the West and in China, in China they are very regularly profitable and cash flow positive in a couple of years, whereas in the West there's always some mechanism needs to be overcome, and the cash flow positive only happens like 5 or 6 years later. So that's the beauty of China. The adoption is much quicker from a cultural point of view, I think, but I'll be happy to hear your views as well. And these startups are much quicker in the money, and that's what makes so easy to finance them. And there's less of a need for venture capital. Is like with deep pocket. It can be really done even by retail in China. That's the beauty of the industry.
Okay. Like the American model is just, no profits, just keep raising money, right? Like forever. Well, maybe not forever, but for a longer time. I mean, I want to segue in a second, but when you guys are looking at fintech startups that you want to invest in, what's the typical timeline for you to make an exit, or to get some kind of, or is it that you want to get another round of investment, or do you want to look for an exit? What mental timeline are you looking at? And does it differ from place to place? Like you're saying in China, maybe it's shorter.
Exactly. In China, we're looking at the typical Series B, let's say, with a view to go public in 18 months. But in other parts of the world, we don't come in before Series D or E, because we know that there's a longer time frame.
Okay, got it. James, you look like you were ready to jump on the mic.
I can do that one. So we look at sort of certainly in Asia and North America, our main markets. We're looking at sort of doing Series A quite early on, but then stepping up the amount of funding for the successful businesses, and not all of them, if you're investing at that stage, will be successful. But I would say sort of the successful ones could take you 5 to 7 years to get from that stage to an exit. Things are a bit slower here in Asia on that kind of stuff.
Yeah, okay.
Yeah, I would concur. So we invest in Series A. I would say typically our hold is 7 to 8 years. That's what you need to kind of build a proper business and get towards decent profitability, have a few rounds of funding. Of course, we're happy with any consecutive round, B, C, which is then higher in valuation. But typically, it would take us 7 to 8 years.
Okay.
One thing I say is that the only exception for us would be, because we're sort of more geographic, more global in our outlook, is that we've considered making investments in a later stage, B and C and D, in companies that are, say, US based and want to start operations out here. Then we'll go in at a later stage, in which case then we need to turn that in just a couple of years, basically. It's really dependent on the stage that you're going in at.
Okay, I do want to segue to talking a little bit about blockchain. You can't talk fintech without talking blockchain. It seems to have like taken over the monster that took over fintech. But as we go there, if you guys are taking pictures, because I know it's a good-looking panel, you want to take pictures. sign up thousands of people on your social media. The hashtag is hashtag 121TechInvestment for this conference. So that's the way to do it. Okay, so as promised, blockchain. Guys, blockchain, as I said, it's a monster that's taken over fintech. Is it promising or is it peril? I mean, is it overhyped? Where are we on this arc? And if you've got ways where you think yes, it's appropriate here, but not appropriate in other places. If somebody comes to an investment, you're like, pfft, and other people, you're like, that I would actually look at. What are those distinctions in your minds? When you look at those types of things.
Yeah, Andrew. My view is that overhyped for sure. Yeah. I think it was extremely, popular with the craze on crypto and when the crypto was supposedly going to the roof. But now, if you look at the fundamentals, to me, blockchain is an extremely useful distributed technology to have data safely distributed globally in a way that cannot be lost, essentially, because it doesn't really rely or depend on any specific storage provider, let's say. But that comes at a cost, which is you basically need to have distributed data across the world to make sure that this works. And financial institutions operate, in my view, with a lot of privacy and a lot of data that I think needs to be storage in very secure and limited number of places. So when you think about micropayments, I wouldn't mind if blockchain stores details of micropayments across platforms. I know there's cryptography, high-level cryptography, but there's still an inherent risk that this information are stored everywhere and they can be stolen. But I don't care if it's micropayment. But if it's something related to my financial picture, say your net wealth or your banking statements, for that information to be distributed everywhere so that someone can really pick it up and reconstruct it, I'm still don't think that's a way forward. And therefore, I think in those applications where privacy is the key, despite all the effort on high-level cryptography and all that, I think that's still not a solution. So I think it's more limited to micropayments and situations where you don't have really privacy issues. That's my view.
Okay. Yeah. Are you guys looking at these types of things, or?
The thing is, I look at the business case, and I would 100% agree that it is extremely overhyped. I mean, if this isn't overhyped, I don't know what is.
Do you think it's the cryptocurrencies that are overhyped, or blockchain as a technology? Because people are starting to be able to distinguish between.
Well, first of all, people are confusing all of
time.
it. Yeah. So it's a matter of who you're talking to and when and in which process of the fundraising you are talking to them as well. So I think it's clearly overhyped, and we keep on looking at the use case. So if there is an actual business case, if there is an actual use case for using blockchain within your product, and whether it's B2B or B2C, I don't really care. If there's a use case for you using this specific technology and it makes sense, we'll definitely have a look. But I and especially personally try to shy away from just hearing the blockchain story, and that is a reason for us to invest in a company. Doesn't make any sense to me. It has to be an actual use case.
Okay. Yeah, James, what do you think?
I completely agree with what you're saying. I think there is a lot of confusion. I think we need to be clear about a few things. There's the coins, there's the blockchain technology itself, and then if you look at blockchain, it is useful. It is an interesting piece of technology. I'm trying to remember the key things here, but the way to think about it is it's pretty open and transparent. Well, that's great unless you're a bank and you need to lock your accounts away and not show anybody. So therefore, you've got a problem. It's great for reaching a common solution and doing payment transactions and settling on a common ledger. But then it's all about getting a group of people together to agree about what that common ledger is, right? And maybe some of the stuff in that ledger you don't want to see anyway. Clearly there are cost advantages in doing it, and the scale of running a common platform together obviously reduces costs. But the problem with that is you can do that on the cloud, right? I mean, so by the way I look at it, okay, we've got a completely transparent system. That's great for publicly available information that everybody can see, but most information is not really publicly available. It's proprietary to somebody, so therefore you've got a problem with security, right? Now, okay, I can share all this information and reduce my costs. Yes, you can, but the problem is a lot of those costs actually you could save by using, a more generic common ledger rather than blockchain. Blockchain's a particular type of shared ledger. you don't need to go to all the expense of using a blockchain to use shared ledgers. Shared ledgers are a great technology. You could just use that, right? And then, okay, you should use sharing common processing platforms. That's also great, but that's the cloud, right? So a lot of the stuff that we're talking about blockchain doing, you actually need to justify each sort of 3 or 4 of those things to make sure it's worth using blockchain. And most people are picking up one of those and saying, I'll build it on blockchain. And it's not the right answer. You need all 4, right? And I think...
Do you find good businesses are burdening themselves with claiming they're going to implement an unnecessarily complex blockchain or token-based structure? It's like, hey, you're a nice girl. You don't have to dress yourself up that much. You're nice just the way you are.
I might turn it the other way around and sort of say that the number of entrepreneurs I meet at the moment is say they've got a completely unrelated business, has nothing to do with coins at all, and I've known them for sort of 6-12 months, and I've been watching their business. They come and say, I'm going to do a coin offering. I'm going to raise $25 million US, and I'm going to raise it at a market cap of like 500 million. And my answer to you is, great, man. If you can do that, think of me when you've made your money, right? Because I haven't anything to do with that kind of stuff. And there's a lot of that going on, just stuff that should be nowhere near it. And, they're good entrepreneurs. They see a big pot of gold that people are giving out free, and they're going to go and grab their share. Good for them, right? Unless you're the guy putting the money in the pot, right?
Yeah. Would you guys ever look at a company that comes to you and says, we're going to do this, and it's blockchain, and there's going to be a token or a coin, and you're like, you know what? I would invest in you guys if you weren't doing all that, and I want to see you do the long term. And know that you're going to work to make this a 5 to 7 year payoff, not, cash out on your ICO in a couple of months. Have you had those people?
I have done it.
You have done it. You've told somebody, go away, come back when you're...
I've actually invested in someone where I thought it made sense. They were very specialized in what they did, and I think it made sense, but most of them I'm just throwing out.
Okay.
Same for us. We actually had a company where we were an investor on the board for a pretty long time, and they decided to launch their ICO last year, and it literally took us 3 to 4 months to make a decision as a board whether we should go ahead with this, yes or no.
Wow.
And they convinced us. They had a separate lab, a separate team, kind of focusing on this business. They had their original team still focusing on their existing business, and they made a good use case. Again, going back to the use case, it made sense to us, and hence we said, let's go forward with this.
But they had to convince you that they were not going to let the regular business fall apart.
Exactly.
Hence the separate team.
Exactly. Yeah.
Take notes. Okay.
Same for me, actually. I had a mobile game company coming to us, but the cover was a blockchain business, tokenization of mobile game experience. And digging deep, there was really no expertise on that. It was, I think, an okay business on the mobile game side, but the way they tried to cover it with the blockchain, it looked to me like they're trying to basically just ride the wave, but no real expertise. And they were, I think, less knowledgeable than our team on that subject. So that really put them on a very, very tough spot to sell the business to us, basically. Yeah.
Okay.
I just want to go back to the blockchain. I really do think that the blockchain technology is powerful. I think we will see the massive road crash that's going to happen in ICOs, in 2 or 3 years' time, or we'll look back at it in 2 or 3 years' time and say, what were we doing? But by that stage, I think blockchain will be taking an increasingly larger role in a lot of sort of infrastructure and stuff in IT systems. It really is strong. However, I would say that it may not be the blockchain solutions we're looking at the moment. So the core of the blockchain, which is the code that actually underpins Bitcoin, the problem with it at the moment is just not scalable, right? I was looking at some data yesterday on this. So blockchain can do about 7 transactions per second. They've got some new developments that are sort of maybe doubling or tripling that. But if you think about the fact that Visa's platform does 20,000 to 50,000 transactions a second, we are a long way from having a commercially viable blockchain, right? Now, there are a lot of startups out there who are coming up with completely new ways of doing this, which are not blockchain. They deliver a similar kind of functionality, but they're not. Those are really interesting, because all of a sudden then we could get central banks, big stock exchanges using this in a means which would actually make sense.
Yeah, we got a hand up over here, and we got 17 minutes, so maybe I was thinking to go to questions at 20 minutes, so maybe now's a good time to segue. So you're jumping in. Fantastic. We love it. Yeah, I'll come over. I'll play Donahue.
Yeah. So you mentioned that. What about the new EOS mainnet? They raised obviously $4 billion, and now everybody's waiting for the vote. I don't need to get into technicals, but it's
But what
just
I-
2 million transactions a second faster than Visa. Obviously needs to be flushed out and supposed to take over.
As I said, there are stuff coming through, right?
Thanks,
But I
Ruben.
think the existing thing is not there. It's not there.
I think the biggest issue is where we haven't seen similar products being commercially tested yet. So most of them, even the products that are going on the mainnet, are tested in a relatively small environment. When you kind of open it up to the world and when you have to commercially test it, that's going to be the proof in the pudding, I guess.
And I think also,
You want to jump in there?
yeah, just
Yeah,
quickly.
Yeah, for sure, sure.
I think it's, in a way, well, the economics of the internet, right? I think there's a parallel with the economics of blockchain. So there needs to be a economics mechanism which makes people invest in, say, internet infrastructure, server, routers. So there's a way to split the internet broadband fee that you pay here across the world, basically. This signal needs to be delivered everywhere. And I think the same will happen with blockchain. You need to have people in the system that needs to be incentivized through a mechanism, economic mechanism that is not there yet, so that people can invest in those ledgers and invest in those servers, and they can grow and become faster. But at the moment, it's just individual companies or individual exchanges separated from each other without really an incentivization mechanism that enables the system to grow quickly and to become effective.
Okay, well, I've seen Noya Networks has been like hammering me with ads about how they're gonna. You guys know this one, right? They've been shopping it around, and supposedly they're gonna pay you to use your unused computing power, like the SETI program, looking for aliens, except for you get paid. So I don't know, James.
Yeah, I just wanted to go back one of the sort of story around coin offerings and stuff. Everyone's really excited about this stuff, and there's a huge amount of investment going on. But one of the big shocks to me, I think, over the last 6-9 months was that I put some coin. I bought what was then wasn't called a coin offering. It was called a token over 12 months ago, and it traded completely flat. And that was exactly what I expected to do for the first couple of years. And then it took off in January. So I thought, right, fine. Being a good investor, I should take my cost out. So started the process of trying to get liquidity in it. Right. 3 months later, 14 different applications to different trading platforms, and I don't know how many KYC forms I filled out. I finally managed to get some cash back here in Hong Kong.
Right.
Getting in is easy, getting out is bloody hard. And for those of people who are pouring money into this, professional investors worry about, I wasn't very good at it. I'll put my hand in the air. I should usually have done my homework before I did that. But it isn't going to be easy. When the crash comes, there are going to be a lot of screaming people because getting out to fiat is not as easy as it looks.
Ooh, the crypto lobster trap. Watch out for that one. Easy to get in, tough to get out. All right. I am taking questions from the audience, so whether you're thinking of doing your own ICO to fund your company, if you're running a Belt and Road blockchain consortium, or whatever you're doing, put your hand up if you got a question. Anyone? No? Good, because I've got some still good. All right. We talked about companies that are doing things using blockchain, and there's logistics companies, and you mentioned gaming companies. But people in the fintech space, are they using blockchain technology? How are they meshing with regulators? I mean, are regulators able to keep their heads around this? I know the MAS in Singapore hired R3 to come out and train 200 blockchain engineers, kind of to see the Singaporean economy, so they could get a lead on this, but also so they could start to figure these things out. Are regulators able to keep up with, it seemed like they were struggling to keep up with regular fintech, and others like fintech, blockchain, fintech. Are they keeping up with it? And would you invest in somebody? Would you look at something and say, great, love it, regulators aren't going to let it fly, just because they don't or can't get it? Is that a thing, Michael?
I think regulators are, coming from Singapore, I think the MAS is doing, I have to be honest, the MAS is doing an amazing job in at least getting an understanding of what they should be doing in terms of regulation. They've opened up a sandbox for startups to sort of co-create solutions for banks. They have a lot of conversations with all the banks in Singapore. So how can we work together?
And people are actually using the sandbox, right? They've been approved, and they're actually
exactly.
using it. I mean, in some places they say they have a sandbox, and then like everybody, it doesn't get approved. But carry on.
Yeah, they actually, and I think upcoming FinTech Festival, they'll have another big announcement. So there's enough happening. I think sort of by example, regulators are catching on. And it's always a catch-22, I guess. You know, it's always technology first, there's always companies first, and then the regulators are like, oh shit, we need to step up our game.
Always.
Some of them do, some of them clearly don't, but I would say there are luckily good examples of regulators stepping up the game and actually talking and working with blockchain startups to kind of see how can we work the solutions into our economy.
Okay, so you're saying Singapore gets a passing grade on this? Or maybe better. What about other jurisdictions? You guys have any?
I can talk about my experience in Hong Kong with investment we were about to make on, let's say, blockchain. And I think Hong Kong is, in terms of blockchain regulation, is very much influenced by cryptocurrency regulation, and they're taking a very cautious approach. So a few of our investee companies have to essentially leave Hong Kong for Jersey, for instance, in the UK. To be able to set up exchanges and blockchain infrastructure. So I think Hong Kong is a little bit more cautious because they associate still blockchain with crypto, and they requires everything goes through a blockchain ledger to be configured as security. Security is SFC regulated, and SFC is not happy, therefore you have issues. So I think from what I understand, Singapore is a little bit more flexible on this than Hong Kong. And I'm sure Hong Kong will catch up, but it's not there yet.
Yeah, like the digital banking thing where,
that's right.
You know, they finally said they're going to take applications for digital banks, and people are applying, and it's like we're still waiting, and yeah. James, you want to?
Yeah, I think again, you need to be clear, have a clear definition, line in definition between sort of an ICO and blockchain. I think, yeah, certainly if you're talking about Hong Kong, the regulator is paranoid about ICOs, and one of the reasons is we look, Big Brother over the border is clearly having a bit of a sulk about ICOs, and that's having an effect on our regulators here, right? They don't want to be jumping ahead of the guys on the mainland.
Do you think it has been on the whole good for Hong Kong? Like with everybody, you know, everybody in China basically had to shut down shop.
I think so. I mean, I'm what shall I say? I'm very cautious about the source of the funds in a lot of what's going on in the ICOs, and I think a lot of that is coming from sources that we don't really understand, and I think some of that might well be over the border, and that's why you know that's why they're particularly keen to understand what's going on. But I think the regulators, have they understood that the big banks are thinking about using blockchain to produce common settlement ledgers, and are they objecting to that? No, that's up to the banks, right? That's blockchain. That's not an ICO. I think you've got to make a clear line between them. But I also think it does vary a great deal between jurisdictions. And I think Singapore has a kind of advantage. I have a sort of very controversial, maybe it is controversial, that Singapore controls the banks as well as the regulator, right? So if the government decides that they want to do something, they say, hey, you, Mr. Regulator, this is the new rules. Hey, you, Mr. Bank, you're going to do this new business. Well, our government could turn around and say, hey, you, Mr. Authority, go do this. But they can't shout at HSBC and Standard Chartered and Bank of China and say, you're all going to do this. They'll all say, there's no money. I'm not doing that, right? Whereas in Singapore, they don't get any choice. They have to follow the party line, right? So it's a different setup because we have very much more commercially driven banks than in Singapore.
Yeah, Marco, you got something.
I agree. Plus, I also think for blockchain in particular and the distributed nature of the technology, local regulator may not be the answer. Like, it should be a global regulation from the start, which is basically very difficult, impossible. But if I make again the parallel with the internet, there was ICANN over there, like repository for the web addresses, which came from the US and then became de facto the global standard, and that enables the way, like the internet of the economics, basically the economics of the internet, but essentially how broadband fee get distributed. There was already global regulation there that made the internet possible and made investment infrastructure and router and service possible. That should happen immediately, but everyone is approaching it from a local jurisdiction point of view. And
yeah,
how do you're gonna have a global set of regulators there? I think there's no visibility there yet.
Yeah, I do think that part of it is that local regulators also want to protect local consumers and local economies. Yeah. So we are seeing now that other countries across Southeast Asia are slowly adapting rules in terms of crypto and blockchain. Thailand released a 7-point rule, I think, guide yesterday. That Vietnam is working on something. So slowly there is stuff happening, but there's also a concern of how do we protect our local economy and our local consumers.
Yeah. Yeah, absolutely. And this hasn't been elevated yet to the level of an ASEAN, where the entire ASEAN group, when they're having their discussions about regulating this or that or freeing up trade, they're not looking at this yet. at all as a block. I am taking questions from the floor. We got about 5 minutes left. If anybody's got any out there, we are happy to have them. Yeah, right over here. Sure. I got a microphone for you even.
You mentioned protecting investors, but when we're doing these ICOs, we're getting a white paper which is 10 pages long, and basically it could be written in an evening by someone. You do an IPO, and you spend months auditing accounts, going through verification exercise. The double standards are just so stark. Yet they're making, as you say, they're raising, all of a sudden a $500 million valuation money. It makes no sense from a sort of a market discipline and an investor protection point of view. Yeah. I mean, forget all the intrinsic merits of whether it's good business or not, and some of them are, but the double standards that the regulators are sort of tolerating. I mean, you do these reverse ICOs we're hearing about. Well, if they can raise money in the real world with fiat, why then bother to do an ICO? I mean, to me, it seems counterintuitive. Yeah. I mean, some business models lend themselves, as you say, to that, but others blatantly don't.
I completely agree with what you're saying. I mean, I think they're subverting the system, but there's a huge amount of enthusiasm, right, from people who are willing to put the money in and people who are willing to take it off them. And the regulators, I mean, I wouldn't want to be them in the middle of this lot at the moment, to be honest. I'm quite happy I do my job and not theirs. But there are reasons there are all those safeguards behind IPOs and everything else. I think a lot of people who are investing in coin offerings are about to discover why.
And I'll break the moderator rule and get some digs in there. I think that part of the reason for the enthusiasm was like basically the banking world and the regulations had priced out small players. If you were a dorky 25 to 35-year-old tech guy, no private bank wants to talk to you. You've got no opportunity to invest in anything interesting or exciting. And here's your thing, and it's unregulated. And I mean, the traditional banking sector in financial world, it kind of shut them out. So I mean, that's part of the appetite. The second thing I'll think is, I did work on pulling together a couple of white papers after the big SEC and SFC in Hong Kong saying, if you do these 4 things, you are a security and we will regulate you. And that was when people started hiring PwC as consultants and Kingwood Mallison as lawyers, and they were spending money on making sure their white papers weren't going to get them in trouble. I think that was a little bit of an inflection point where you started to see some improvement in quality in established markets. Like if it was coming out of Venezuela or Russia, then no. But if it was based in Hong Kong or Singapore, people didn't want to go to jail. So the quality of white papers, and that was about September, October last year. And I mean, now the public sale ICO is almost, I wouldn't say it's dying out. They're still happening, but a lot of people are raising money in venture cap. Are you guys are seeing that? They're like, we don't even want to do a public sale anymore.
Nature of what they're trying to achieve here, but there's no friction if I walk into HSBC and hand them a $1 note or Standard Chartered. But if I hand in my Bitcoin to one exchange, I'll say thanks. The next one will say no. Why? Yeah. For goodness sake. And that's why there's more friction in the system than people really realize. As you say, it's almost impossible to get out.
Your lobster.
That's my point.
I'm a newbie.
It's almost impossible to get out.
Yeah.
I mean, that's it. You have to do one step in each bank, each entity, and move the thing around at vast extent. And one of my favorite parts of that process was I finally got onto an exchange that seemed to list the highest price for the particular coin I wanted to trade. And I discovered that once I'd spent a month getting through KYC, I was on that market looking at the trading. The spread was 95% of the value of the stock, right? So I was getting 4% of the value of my stock back. Who'd trade on that? But some people would, and people were. It's just unbelievable.
Okay, Michael?
I think the craze is normalizing a little bit. We've had instances where we had teams that literally came together after 4 weeks drinking beers, had another guy write a white paper, and then raised $60 million. To me, as I'm 42 years old, that doesn't make any sense. And I think as an investor, you should see that and flag it and say, guys, this doesn't make any sense. Luckily, there are also good projects out there, and there are decent entrepreneurs that are actually trying to build something, putting stuff on the mainnet and thinking about this long term. And there's 95% which is BS, unfortunately. But I guess it's weeding out over time.
Yeah. Okay, Marco.
Just quickly, I think I totally agree. There's this ICO lack of disclosure, but there's an interesting parallel, which is the private market. I mean, of course, if I invest in a startup, I ask all the information, they provide me all the business plans and all that. But if you're trying to invest in Uber, Series E, which I did, I said, I want to see the financials, I want to see where you're making money. No, so it's worth 70 billion pre-money. Trust us, but you can't see financials. So I mean, in a way, there's an interesting parallel with the ICOs. Also, on the late stage rounds of private capital, there's a big craze there.
So it's not guys raising 5, 10, 50 million in an ICO. It's the $7 billion deal, $70 billion deals. You don't get to see it.
They can't even see the financials. Yeah.
Okay, so we're going into the closing minutes of this, and I'm gonna have a quick round with you guys. I'm gonna ask a question. I'm not gonna ask you what's hot or not, because that's what we led off with. But as investors, I'm guessing you guys are always looking for undiscovered value. Is that fair? Yeah. Okay. So I'm going to ask you just very quickly. I'm going to pick a sector, and I want 1, 2, 3. Do you think there is unappreciated value in a sector? It's almost like asking where something is on the technology hype curve a little bit, you know. So I want to know if you think something still has room to grow, and so it's undervalued, or you're like, no, I'm not interested because it's overhyped, and there we go. Okay. So I'm going to start off with some things that'll be easy for you because we talked about them already. InsurTech. Still got room to grow, or is it overhyped?
Clearly,
you don't want it?
No, very, very significant upside in InsurTech.
So you're going this?
Yeah, absolutely.
Okay, give me a hand, guys. Give me a hand. Up, or down?
Very much up.
Up. 1, 2, 3, up. Okay, good. Artificial intelligence. Somebody says artificial intelligence. You think like it's overhyped, forget it, or you're like, yeah, I'll take a look at that. About there? Okay. Oh, we can titrate this. We can have like really steep or okay. Yeah, you're kind of mid-range, yeah?
If it's applied to, again, a use case, I'll be here, yeah.
Okay.
It depends how you define it. I don't know how you define artificial intelligence. It's very difficult for me, but I'll say in the middle.
Okay. How
Say
about
machine learning, and then I'll agree with you, right?
Yeah, I'll do a double.
AI is such a broad term now.
Blockchain with ICO, blockchain without ICO. So let's do blockchain with an ICO first. Guys, take note. Take note. So that's blockchain with an ICO. How about blockchain without an ICO? Okay. You guys, there are distinctions within this community. Okay, give me another one, guys. We got to. How about wealth tech, supporting the wealth management industry? What do you think? Are we
middle?
Yeah, still got a way to go.
Still got way to go. Good way to go.
Still unappreciated.
It's
Okay.
well on the way, but it's got a good way to go still.
Cybersecurity for the fintech sector, for the fintech sector.
Yeah.
Still
nuts. Yeah, for sure.
Wow.
Yeah.
I met a couple of Korean guys over here that I got a Korean. They're good. All right, good. I'll go visit them again later.
That's a never-ending war. You're always going to be spending money on that, right?
Okay. All right. Okay. Here's one you might not have thought of or have an opinion on, but I'll give it a try. Quantum computing for the financial sector.
Yeah, it's going to be big, is my thing. But when is always our question, right? As investors, it's all a matter of timing. I haven't seen the big commercial thing on that that would make me think right now it's time to put money down yet.
Yeah.
I haven't seen the companies that actually have the talent to do this.
Yeah. That's going to be a big one. That's kind of like looking at somebody's 8-year-old and the ladies. I was like, oh, he's so cute. He's going to be a lady killer. It's like, nah, too early to tell. All right. Very good. Ladies and gentlemen, we had a great panel here. Huge insights. Big thank you for Mr. Savage from Demeter Ventures, Michael Lintz from Golden Gate Ventures, and Marco Rosti from the Phoenician Group. Let's hear it for him.